What's up guys, Ben here and welcome to Motivation to Invest. One of the world's greatest investors, Warren Buffett, has a famous saying, don't bet on America. Yet, he's done exactly that. He's bet over $6 billion on Japanese stocks. This is extremely uncharacteristic of Buffett. And what does this mean for you as investors? Should you also be investing into Japan? Well, in this video, we're going to find out as I deep dive into the Japanese stocks Warren Buffett has been buying, the Japanese stock market, the Japanese economy, and answer the question of whether you guys should be investing into Japan. So without further ado, tabiko mimashou. Welcome back guys and konnichiwa. If you guys appreciate the hard work which has gone into this video, feel free to give it a big thumbs up. That really helps out with the channel. With that being said, let's get into the details. So Warren Buffett and Berkshire Hathaway have over $146 billion of cash on hand. Buffett's been criticized for this in the past, especially during the March crash where he wasn't invested into many companies. His famous saying is be greedy when others are fearful and fearful when others are greedy. But in this pandemic, he was actually fearful when everybody else was being greedy. And then at Berkshire Hathaway's annual shareholders meeting, Buffett stated, don't bet on America. But now he's done exactly that, and he's betted over $6 billion in Japanese stock. Buffett has invested into 5 of the largest companies in Japan. These 5 conglomerates of Japan are known as the Sogo Shosa, and are benchmarks for the Japanese economy. They range from home shopping networks to convenience store chains. Berkshire acquired stakes of approximately 5% in Itochu Corp, Marubeni Corp, Mitsubishi Corp, Mitsui & Co, and Sumitomo Corp. Now this is an extremely significant investment, not just because it's $6 billion in 5 of the largest companies in Japan, but also because Buffett tends to shy away from foreign investments, and more crucially, most investors tend to shy away from Japanese investments. Because if you didn't know, the Japanese stock market has not been great since the 1980s. Diving into the Nikkei 225, which is the equivalent of the S&P 500 in the US or the FTSE 100 in the UK. This is the top 225 companies in Japan. We can see that around the 1980s, the stock market was flying. This was because back in the 1980s, Japan was taking over the world. From gaming, we had Nintendo and Sony, and then in the automotive sector, we had Mitsubishi, Nissan, Kawasaki, Honda, and many, many more. When Japan's asset prices continued to soar in 1989, policymakers became increasingly worried about asset bubbles. To cool this overheating economy, the Bank of Japan increased their interest rates, and in less than a year, Japan's Nikkei stock index plunged by 50% from approximately 39,000 to 20,000 and finally hit 15,000 by 1992. The Nikkei's dramatic crash occurred because its value was inflated by false hopes and hype instead of being based upon solid economics. As the financial crisis unfolded, many corporate scandals also came to light. These days, Japan's government and corporations are still suffering under the weight of crushing debt loads that have accumulated since the late 1980s. After 2 decades, Japan's economic growth has still been moving sideways. For example, today, the Nikkei 225 is at just 23,000. This is the same price as it was back in the 1990s. But could things be changing? They say yesterday's losers could be tomorrow's winners, and that seems like it could be the case for Japan. The stock market there is definitely undervalued, which may be why Warren Buffett has invested into it. There's also another interesting fact which I discovered. Analysing which economies have been hit by the global health crisis, looking at the number of infections per country, we can see that US tops the list with over 6 million infections and over 188,000 fatalities. Brazil comes in second, And then we have India, Russia, Peru, South Africa, Mexico, UK's all the way down here, 346,000. Where's Japan? Oh, Japan is very close to the bottom with just 71,000 infections and just 1,357 deaths, just above South Korea. So what does this mean? Well, this means that Japan has been one of the least affected countries by the global health crisis. So with many economies around the world still struggling to fight the health crisis, Japan are doing just fine. In addition to that, the Japanese government has not had to pump in the same amount of stimulus as we saw over in the US and even in Europe. In the US, many people are predicting the dollar to become devalued because of all this excess cash which has been printed. Japan doesn't have that problem. Now, I'm not saying you guys should sell all your US stocks and invest everything into Japan. The key here is to be internationally diversified. And yes, the Japanese economy could move sideways for another 10 years, or it could rebound massively and become king of the world once again. Another interesting sign which also pointed to Japanese stocks was when I was doing some research on the investing platform Stockopedia. Now, if you guys don't know, Stockopedia is where I use to research stocks before investing into them, and it's an exceptional platform. So diving into Stockopedia, we can see you can use what's called a screener. So these can look at the top stock ranks, the top QM ranks, the top VM ranks, or they can use great investors' rules such as William O'Neill's CAN-SLIM strategy, Jim Slater's principles, and many more. So the screen of screens, if you would have invested using their screener here, you would have beat the FTSE Developed Asia Pacific Index. But as you can see here, there's a lot of Japanese companies which have a very high stock rank. So on Stockopedia, every stock is given this stock rank, which values a company in terms of its momentum, its value, and its quality. Variety of Japanese companies here, and they all seem to tick all the great boxes. So 94, 92, another one here, 99, 97, 88. So there's plenty of companies here where, as far as the numbers are concerned, they're great investments. For example, looking at the valuations, we can see here, this one's got a PE ratio of just 8. This one's got another PE ratio of just 8.8. This one down here, it's got PE ratio, that's price to earnings ratio, of just 5.4. If we compare that to the S&P 500, that has an average PE ratio of 25. That means each company is valued at 25 times its earnings. If we compare that to some of these Japanese companies which have a PE ratio of just 5, then you can see why they could be a great value investment. So I know what you guys are thinking. You're thinking, Ben, are you really investing into Japan? Well, let me tell you guys. I do believe that Warren Buffett is onto something, and he has spotted some great value investments. However, I also believe that the US is still a strong economy and a great place to invest. So in my portfolio, I will just continue to be globally diversified. And if you guys want to see stock analysis of a few Japanese stocks, then let me know in the comments below. And if you're interested in the stock screening platform which I used, I actually have a 25% off discount link which you guys can use exclusive only for the viewers of Motivation to Invest. So I'll leave that in the link below. But what are your thoughts on Japan? Do you think their economy will continue moving sideways, or do you think the Japanese rebound is coming very soon? Let me know in the comments below and I'll join in the discussion. And if you guys enjoyed this video and you found it helpful and informative, then please give this video a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great content like this for you. In addition, if you guys want more investing tips and exclusive stock market picks, which I personally am investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, I will see you guys in the next video. Invest safe.